Now let's try and understand how the commodity markets actually at present are looking like from Ankit Narshana, the commodities analyst at Edelweiss Investment Research. He joins us live from Mumbai here. Ankit, welcome to the show. What do you make out at present in context of strategies? What you would be advising to your clients on oil prices at present?
Yeah, hi, good afternoon. See, first of all, when we talk about crude oil, we have seen this rally of crude oil from $67. So from $67, the entire rally was US-Iran nuclear deal rally, you can say. Now, yesterday, US President has decided to walk away from this agreement. Now, further, what will be the interesting things to watch out would be first, how much of the production impact will be there on Iran, how much of the crude, how much supply would be impacted. Second, what kind of sanctions would be there on the other business sectors? I believe US would be imposing sanctions on other business sectors such as insurance, then shipping, then payments. So all these factors will come into the play. And the most important factor would be whether or not how the other allies, say France, Germany, would join hands with US. So all these factors for the next couple of days or three would be worrying in the market, and this will definitely, in the context of price, this will support crude oil prices. So on the perspective of the strategy, one should definitely look for buying crude oil on dips. On MCX front, one should look at the levels of 4730, which is a very important support for intraday perspective. One should definitely go long at these levels with the stop losses of 4700, 4690. On the upside, 4820, 4840 is what the level we are looking for the intraday.
Right. So, Ankit, one small question again for our viewers. Again, if they actually are going to buy in terms of implement the buy strategy, because President Trump has also actually kept the door open to negotiate another deal, and again, we still have to understand how the participation is coming from the other countries here. Do you see any chances perhaps of reversal of crude prices from the higher levels here?
See, when we just look at the price chart of crude oil, crude oil is entering into the territory of resistances once it goes above $72 on NYMEX. So in the range of $72 to $75, we could see a pause in the crude oil rally. From there, it will be interesting to watch whether or not we are seeing a severe correction in crude oil prices, say 7 to 8% correction, or whether or not crude oil prices are undergoing under a consolidation phase. But definitely $72 to $75 is the range where all the long traders should be watchful. They should maintain the strict stop losses, and only then they should hold their long positions.
Right. And from oil prices again to base metals, what would be your topics across precious metals, base metals? What are the strategies you want to share?
Yeah, see, one pick we are looking is at it's on MCX zinc. So we have seen in this year, because of supply worries, zinc prices have already fallen about 12 to 14% from its highs. Now on the price chart, there have been multiple divergences on zinc prices, which could lead to a big short covering move in this commodity. So one should look for, first of all, one should cover all the shorts, and now one should start looking for finding long opportunities on zinc. So we are advising our clients to enter long position on zinc at current levels for the targets of targets of 211, 212 on the upside, and maintaining the stop loss is at around 205.
Right, again, that's the word coming on base metals here. Ankit, just a word on dollar also here with respect to gold prices. Are you expecting more up move in dollar again? Because what's your overall view on gold here? Can we expect a breakdown here, or you are thinking perhaps gold prices are going to sustain here?
Yeah, see, as far as dollar index is concerned, this rally in dollar index was majorly because of weaker than expected economic data from eurozone. Now euro consists of a major portion of dollar index, so any negative on that part gives buying in dollar index. So this rally in dollar index we are expecting should halt somewhere around 93.30, 93.50 zone. about at this level, 5 years back, this was the same level from where dollar index was struggling to move higher. It is coming back to this zone, and from there, if we can see any dip or any correction in dollar index, it will be supportive for gold prices too. Now, as far as COMEX gold is concerned, since last 3-4 trading sessions, $1320 is the level above which it is struggling to move higher. And as we are aware, 1300 is a psychologically very strong support. So 1300, 1320 is the no trading zone as of now as such. So above 1320 is what ideally one should wait for, because it has been n number of times now, gold has taken support at $1300. So we are again expecting it should hold $1300, $1295 on the downside. And if it breaks 1320, this will give a fresh entry to all the long traders, and one should look at this level to enter fresh long positions.
Sure.
Similarly, on MCX front, if we see, we do not see much of the movement on MCX gold, because here rupee is weakening. So on the MCX front, gold could trade in the range of 31,000 to 31,300.
Right.
So again, this range, one could play in this range, or one should wait for the break about 31,320 and then enter long positions for a target of 31,500.
Point taken again.
31,600 and place a stop.
Absolutely. Point taken. You have a bullish view on gold again, as you're just saying about it. Since you're running short of time, let me do a quick recap. Ankit basically has a buy call on gold, silver, crude oil and zinc again. Across all four again, there is a buy call here. Sandeep, thanks a lot for all the insights and strategies here. From the commodity strategies, now let's shift the focus into an interesting part of the supply chain here. Now, BSE again is in the process of setting up a commodity business. Remember, 1st October again is a time again where they could be launching commodities. They also actually could be providing